Good afternoon, traders out there in Traderland. My name's Dez here at Grok Trade on Tuesday, April 10th, 2012. Markets are in a free fall, down fifth day in a row. We have the Dow down more than 200 big ones, down almost 214 points, down 1.65% on the Dow. The S&P down 1.7%. NASDAQ down 1.8%, and the Russell's down a whopping 2.4%. However, stock index futures after hours have started to pop back into the green due to Alcoa beating estimates, and due to that it gives a nice bullish sentiment going into the future for this earnings season that's upon us. Banks take a large 1.8% drop, VIX spiking 8.4%. Now we have a VIX, a fear indicator, over 20. Gold up 1%, silver up 0.65%, crude oil down 1.2%, and US dollar up a fraction. And you have the trend up a large 2.45. So you Grok graduates, pay attention to that. We've been doing deep studies on that. Anyway, let's take a look here. If you remember, we were looking at these two purple lines coming up. We said rising wedge, bearish divergence, thunder in the distance. We're rolling over, and the big blue line's also pinching. We started to break down. Blue line, the question was over the weekend, was that, did we actually break the line? And I said it looks like it. It looks like we did break that line. We closed lower than a major support line. But we did have some support at the NASDAQ. But check this out. We doji out here, but we're on the wrong side of that trend line. And then boom, and then boom. So we have acceleration to the downside, cross over the histogram 0 line. So the rising wedges, both on the blue lines and the purple lines, have broke down. It doesn't charting. I mean, it isn't charting the absolute best, and you can see when bad things are about to come. It took its time to break down, but it finally did so. So there's the breakdown. We did close now below the 50-day moving average, going here to a weekly chart. Check this out. We come up here, and I told you about these tower tops here, these upper shadows, that worried me big time. And sure enough, a big breakdown. So if you look here, we're going back to where we were over a month ago. So in just a matter of days, we've given back all the gains in a matter of about a month. Now the thing is we found support. Now even though we broke this area of support at 1363, we're at 1358 right now, we did find really nice support. Guess where? 25% level here on the Fibonacci. So the thing that I'm watching for here is if we do start to get a bounce off of the 25% Fibonacci on the weekly chart, that could be a really good place to be looking for longs. However, this is such a dramatic drop. Things in motion tend to stay in motion. We have a crossover on the MACD centered oscillator. So we are heading down right now. So it would be foolish to start loading up on the longs at this moment till we get a reversal pattern. Technically, I'd like to see another couple weeks drop here, maybe get a hammer, and then see a bounce, and then look to load up. But if things that drop fast tend to bounce fast, it'd be interesting to see if we bounce back fast, especially with Alcoa in the mix right now. So that should help us out quite a bit. We have some news here. Facebook is possibly looking to have its IPO dates of either May 17th or May 24th. Stay tuned. We'll keep you abreast of the latest on that. Best Buy CEO resigns. There's exporters of commodities. They are warning right now to be bracing for lower prices. Oil right now is at $101. Gold is at $16.58. And we have a webinar coming up on Thursday. To get signed up, just go to the calendar, events calendar at the website. It's free, and we do it only once a month. So you don't want to miss out. Make sure you get signed up. If you can't make it Thursday night, no problem. Just get registered. We'll make sure you get a recording. Only those that register will get the recording. So there you have it. Hey, thanks a lot, Mark the Meerkat Suffering, for helping me out while I was gone and away for the Easter holiday. The very best to each and every one of you. Look forward to seeing you guys the rest of the week here.